and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we are going to have a very interesting session. We'll be talking about gold's new all-time high as Trump imposes new tariffs. So as always, you should always know that this session does not constitute of any investment advice. It's not a recommendation to trade, so you should always do your own due diligence and, of course, practice proper risk management. So, on the economic calendar this week, there's quite a number of things to be conversant with. First of all, this morning we had data coming in from China. Of course, we had the CPI from China up 0.5%. compared to the previous reading where there was an increase of 0.1%, which basically means that inflation is coming back to China. Then the producer price index remained stable at negative 2.3%, which indicates that future consumer price index is going to be a bit lower. And in this case, we are looking at negative 2.3%, which implies that at some reasonable expectation, we should be seeing much lower inflation in China. Then we had Japanese bank lending, which came in at 3.0%, same as our previous reading, so not much of a change. Then the current account in Japan at negative 2.73 trillion yen. It's the same or similar to the expectation, but also slightly lower than the previous number, which was 3.03 trillion. So as for the rest of the day, we don't have much happening. We don't have any major indications for the day, but also we have an expectation for 5 p.m. where we'll be looking at the ECB President Lagarde speaking at 5 p.m. So outside of that, we have quite a number of things happening in the week. One of them being a speech by Fed Chair Jerome Powell, who will be speaking at 6 p.m. on Tuesday. Then also on Tuesday, we'll be having the Bank of England Governor Bailey speaking at 3:15 p.m. So later on, we'll be having some major news happening from Wednesday. One of them being the core consumer price index, as well as the CPI major. This will be on 4:30 p.m. on Wednesday. I believe this will be one of the biggest news in the market this week outside of Trump. We all know that Trump has been moving the markets. So any decisions by Trump have had a big impact in the markets. So far, we're expecting that US inflation has remained at 2.9%. We don't expect much of a change. So for the month of January, we expect that inflation or the basket of consumer products remained around 2.9% compared with the same time last year. So month over month, we expect a 0.3% increase, which is a bit lower than the previous increase of 0.4%. And then for core consumer price index, we expect a slight increase of 0.3% compared to the previous reading of 0.2%. So as we have seen since Trump got inaugurated, and that was in the month of January on the 20th, there was a slight increase in inflation. But what we are seeing with oil prices, which are very correlated with inflation, we are expecting to see some level of drop, especially considering that oil prices have just been going down ever since Trump was inaugurated. So outside of that, we'll be seeing the Fed Chair Jerome Powell testifying at 6 p.m. Then later on, we'll look at the federal budget balance in the US at 10 p.m. on Wednesday. So outside of that, we'll be looking at inflation expectations in New Zealand, GDP from the UK, and CPI from Switzerland before we now focus on the core producer price index as well as the overhead producer price index at 4:30 p.m. on Thursday. Then fast forward to Friday, we'll be looking at the core retail sales as well as retail sales on Friday, and this will be happening at 4:30 p.m. So that's what on the calendar this week. So we don't have much to expect, but a lot to expect from the dollar. So clearly, Fed Chair Jerome Powell testifies on Tuesday. Then we look at the CPI on Wednesday. Then fast forward the GDP from the UK. Then we look at the producer price index on Thursday. And of course, on Friday, we look at core retail sales. So this seems more likely to be a dollar week, a lot of dollar volatility. So we'll be following up on that to see how much it affects trading and try our best to get the best outcome. So outside of that, there's quite a number of things happening in the markets. One, Trump to announce 25% steel and aluminum tariffs in the latest trade escalation. So this will be a pretty important development in the markets. So we'll be following closely to see how it may impact the markets. So also in other news, in China's export hub of EU, traders slag off Trump's tariffs. Australia says it's still aluminium exports create American jobs. So of course, Australia is one of the most affected countries when it comes to the Trump tariffs on steel. Taiwan looks to buy Alaska natural gas as it seeks to head off US tariffs. So every major country is currently very much concerned on how it might be impacted by Trump's tariffs. So that seems to be the major news for the week. So let's check on it. So Trump to announce new steel, aluminum tariffs on Monday. That's today. Importers to pay 25% on top of existing steel and aluminum tariffs. Paid prior metals tariff exemptions for Mexico and Canada is still unclear. And Trump says US reciprocal tariffs to match other countries' rates. So the US President Trump said on Sunday that he will introduce new 25% tariffs on all steel and aluminum imports into the US on top of existing metals duties in another major escalation of his trade policy overhaul. Of course, this will be a major thing. And of course, we all know that if you look at all the top US equity indices, the one that is expected to be the most affected will be the Dow Jones, closely followed by the SP 500, and less impact on the tech industry, that is the NASDAQ 100 index. So outside of that, also, we are looking at US monetary policy. So from the US monetary policy perspective, we know that in the previous reading, the Fed decided to hold rates at a constant, that is between 4.25 and 4.50%. And the next decision will be happening in 7 days from now. And of course, the market is pricing in a 93.0% probability that the Fed will be holding rates steady at 4.25% and 4.50% range. So we don't expect a change of the policy. So we expect the Fed to be holding rates at the current rates. So knowing that we're expecting a Jerome Powell presentation later this week, so we should be expecting to see some level of stability with more bets on the dollar, considering that the tariffs are only continuing. So outside of that, if you look at the performance of currencies this Monday, one of the key things to consider is that the Australian dollar has been one of the strongest currencies this morning. But then if you look at the weakest currencies, Japanese yen has been the weakest, being down negative 0.66% since the week started this morning. So the Canadian dollar has also been pretty weak. We all know that Trump slapped some very strong tariffs on Canada. Eventually he had to remove them. But at the same time, Canada is very reliant on its oil, and oil prices have been going down. So as a result, we are seeing a much weaker Canadian dollar at the beginning of the week. However, if you look at the year-to-date performance and how these currencies have been trending, the Japanese yen has been the strongest, which has gained 3.22% against the dollar. And then the UK pound has been the weakest, being down negative 0.93% compared to the dollar. So what has changed with the yen and what has changed with the pound? So on one side, Trump has been quite friendly with Japan compared to all these other countries, where in the case of tariffs, we haven't seen Trump slapping any tariffs on Japan. last week, Japan basically promised to invest at least $1 trillion in the US economy. So in this case, we don't expect much of a slap from US tariffs on Japan. So focus may be elsewhere on other economies, but for Japan, we don't expect their currency to crumble as a result of Trump's tariffs. So that basically means that despite the weakness that we are seeing in the Japanese yen, there's a good likelihood that the Japanese yen will be making a very strong recovery. So if you look at this article from FX Street, the Japanese yen is pressured by renewed worries about Trump's trade tariffs. A modest USD strength provides a goodish lift for the USD JPY pair on Monday, and rising bets that the Bank of Japan will hike rates again help limit deeper losses for the Japanese yen. So also looking at other articles, this will be a BBC article. How Japan sparked Trump's 40-year love affair with tariffs. Of course, it's a pretty good story. I'll be sharing this with you on the comment section. So if you want to go through with it later in the day, then this will be likely helpful. And then last thing, we check on the major highlights that we should be focusing on for the day. One, the dollar strengthens amid new tariffs, of course, with 25% tariffs on all steel and aluminum imports. We expect the dollar to strengthen further, as we have seen since the beginning of the Trump policies, that is on new tariffs. The dollar has only been responding positively. So we have seen European stocks kick off the week higher, ETF prices rise to two-year high, Swedish household spending falls in December, Norway inflation rate edges up to 2.3%, Turkey industrial output growth at 10-month high, and gold reaches new all-time high. So our focus for the day will be on gold. So as the title of today's presentation says, we'll be focusing on the new all-time high on gold. So gold surged above $28.90 per ounce on Monday, hitting a fresh record high, driven by safe haven demand after US President Donald Trump announced a new global tariffs on all steel and aluminum products, escalating trade wars fears. So the move adds to existing metal duties as part of his trade policy overhaul. Meanwhile, expectation of looser monetary policy from major central banks are also boosting non-yielding gold. Investors continue to anticipate two Fed rate cuts in 2024, despite strong labor data, aligning with FOMC projections. The Bank of England, which has been the key major player in the current gold rally, also cut rates last week with a more dovish stance than expected, while the RBI implemented its first rate cut since pandemic-related measures nearly 5 years ago. So central bank gold purchases further supported bullion, with the People's Bank of China adding to its reserves for a third consecutive month in January, which is shown by official data. So I want us to focus on one thing here, and that's the Bank of England. So the Bank of England has been really stressed with gold traders. So there has been a lot of speculation happening around gold, and one of them is mainly because there's a lot of fear concerning Trump's policies, especially tariffs on different countries. So as we all know, a majority of gold traders have been banking their gold on England and then trading it from there. But now, with the expectations of tariffs, if you could be slapped by 10, 20, 25% tariffs from Trump, then it would make your gold very expensive. So in that case, a lot of traders are moving their gold out of the UK and moving it to the US, which is leading to a gold bank run on the UK, leading to much higher prices than expected. So at the same time, the People's Bank of China, PBOC, has been buying a lot more gold than expected, and as a result, drying out supply, leading to even much higher prices. So in this case, we should be expecting to see on the minimum at least some level of either 3,000 price gold, and that should be happening in this quarter. If it doesn't happen in the current first quarter of this year, perhaps in the second quarter. So let's check on the comment section before we move on to the next part, which will be on the technical analysis part. So good morning, Joseph Gisharu. I can see Manuel in the house, Limu Kevin, Davis Ngige, Wangari Patrick. Thank you guys for joining. So, okay, this is a pretty interesting one. Morning, Rufus. Could the Eagles winning the Super Bowl have an effect on the stock market? Since the past history may have had some effect, I really don't think so. Trump is currently the one person who is moving the markets. So if you're not focusing on Trump, then I don't know what else. It's either Trump is moving the markets or the markets are moving as per traditional or previous sentiments in the market. But as for now, Trump is the boss now. Like whatever you do, as long as you're a trader, if you're not following Trump, then you probably don't have the best outcome. Trump is the one guy who will tweet something on Truth Social and it will move markets instantly. If he announces tariffs, they are going to have some impact on various markets. So it's on you to decide how to treat that. Good morning, Violet Asige, and thank you for joining. I can see LFTJ. Of course, there's a good question to check or comment on the performance on Bitcoin as of right now. So I'll be doing that shortly. So kindly give me a sec as I switch on the MT5 and then we check on what's happening on the MT5. Okay. So first things first, in the markets today, there's nothing to talk about. It's just gold market. It's a Monday. Monday, we expect really slow prices. But from what we are seeing in gold, considering the bank run on gold, then we all know that we just broke into a new all-time high. So the previous high was just nearby. It's something that we just saw on Friday. And now gold goes into a new all-time high. So currently, it's trading at 28.98. So one of the things that we know is almost guaranteed is that the price of gold will hit 2,900 in a few minutes. So if you look at the current price level, the highest we have seen is 28.98. So the likelihood of getting to 2,900, like a few pips, if you're a scalp out there, then this is almost guaranteed to happen. However, for long-term traders who follow the trend, we know that 3,000 gold is coming. And this can be easily argued as the gold era. So if you are a gold trader, there's a very strong likelihood that you'll be hitting the price of $3,000 per ounce of gold. And this could be happening as soon as this month. And we are just starting February. It's the 10th of February. February ends on the 28th. So we are basically looking at 18 days. So a span of 2 weeks could be the likely outcome of gold. Within a span of 2 weeks, we could be seeing gold pushing to the price of $3,000 per ounce. So as for now, we know what has been the strategy in gold. Any form of pullback has been taken as very good for buying the momentum. So notice that we had this previous trend line. I'll show you this. Gold was following this trend line. That was a couple of weeks ago. Then the trend line strengthened to follow this path. And if you look at my trend line here, I'll try even and expand it for you. It was following this path. Then from there, we got to an even stronger trend line where between this low and the other low, we started following this path. So we are only looking at a market that has only been strengthening. So as of last week, this was the trend line. And now you understand what I'm saying. That from this here to this, and then the third and the fourth, we are only seeing a market that is only strengthening. So this means that whenever we get a pullback, it will be pretty much strong. But as for now, we maintain the path, that is the trajectory of the trend, and basically promises a very strong bullish momentum. So these might as well be the best trade of the day. So there is a good chance that we could be seeing some much higher performance. So given that we have broken the previous high, that is Friday's high, then there's a good chance we could be seeing the market breaking above 2900. And of course, whenever it breaks above a major region, we expect some further push. So we could be seeing 2910 or somewhere thereabout. So in this case, there are no candlesticks on the left. The price has never been at this level before. So once we get to 2900, it's a completely new price level. Of course, the short sellers will panic. So we should be seeing some much higher price action. And that's the bet on gold. So outside of that, if you look at US equity indices, they had a big drop on Friday, but this week we are looking at the recovery. So of course, we expect to see some further upside action from US equities. So given the market reaction at market open, I need you to really focus on this. We had a big drop on the US 500 or the SP 500 index, but then immediately the market recovered. So of course, for the day, we expect the price to be headed higher. So it's quite a bullish day for US equities. So if you look at the Russell 2000, also started with a big gap downwards, immediately covered the gap. So we expect some further upside. The Dow Jones is a bit tricky. And by tricky, I mean that we talked about US steel. So Trump is basically sanctioning the steel industry. So that could have a negative impact on the US 30. So not be overly positive on the US 30. But then for the NASDAQ, which has not been affected by the new tariffs, seems more likely to be the better option. Of course, given that it immediately covered the gap, and now we are looking at even further upside. And already, as we speak right now, since the market opened after covering the gap, the Nasdaq is a bit up by 0.57%. So outside of that, we have the BTC. Of course, BTC have had its major problems mostly solved. With the biggest dip which happened last week, going all the way down to $91,167 per Bitcoin, then later on progressing downwards. But then if you look at this week's performance, we are looking at a major bounce from a key trend line level. So this was the major support area as per last week. And if you talk about resistance, I would say it was following this, with this being a fake out. So in this case, we are looking at a market that has been oscillating between the two trend lines. So there was this slight attempt to go up, which failed. But now we are starting a new week on some more energy in the markets, with this being the current case. And of course, we know the correlation between the Bitcoin and the Nasdaq, as well as the US 500. So strong positive performance. And now for Bitcoin, currently trading at $97,758 per Bitcoin. There is a good chance that for today, we could be seeing an extended rally, and that could potentially hit last week's high of at least $100,000 per Bitcoin. So there is a good chance we see a strong bounce from this area headed up to this area. So as for the negative oil prices, we still expect the bearish momentum to continue. Of course, there was this attempt about a week, 2 weeks ago to move higher, which was rejected. The highest price that we got with oil was around $77.038 per barrel. Then last week, we continued with the bearish momentum. And of course, a very strong bounce is happening this morning, which presents us with yet another opportunity to go for short selling positions. So the idea is that anytime we see a big move higher, we don't continue expecting to see price going higher. So in that case, we still look for short selling opportunities. So if you look at the current price action level and you look at the last price that we saw on last day, then you know that we are almost nearing an area where we could be seeing sellers coming back. And that's where we expect to see opportunities for short selling opportunities. So in this case, we don't expect much with oil. Trump policies have been pretty clear. So look at when Trump got inaugurated as president and how oil performed. So January 1st to 20, price is heading higher, slightly lower. Then Trump gets inaugurated, and then for the rest of January, price keeps going down. Now we begin a new month of February. We see price going down, and then on Friday and Monday being today, we see price bouncing back higher. But then the idea is that Trump is consistently looking for ways to ramp up oil production, which will be expected to drive prices lower. So for now, we are seeing a strong bounce. It doesn't make sense to be looking for buys here. So the idea is to look for signs that sellers are coming back and look for a short selling position. So as for the assets, we are seeing the Japanese Nikkei 225 index bouncing again. So clearly it's one stock market index we have been following because it has been in a range. This dates all the way back from September last year. So since September last year, the Japanese Nikkei 225 index has been moving sideways. So the only difference we are seeing now is that the lows are much higher compared to September last year. So since September, the lows were trending around 37,722, but now we are seeing much higher lows. So with this main difference being pretty clear in the markets, then we know that there is a good likelihood that these areas are serving as support. We have seen support happening at the white area here, and now we are seeing even more support happening at this area here, and that is based on last week's lows. So from last week's lows, we saw the market finding support here. So eventually the market got to this bottom. That was on Friday in the evening, and now a very strong bounce from this area. So with the expectation that the market continues with the strong bullish momentum as we have seen this morning, then there's a good likelihood that we could be seeing the market finding some form of resistance along this trend line, which was the prevailing resistance as per last week. So potentially could be seeing the market hitting this area this week, and that is 39,109. So as for yen pairs, yes, we are seeing the dollar being pretty strong against the yen. If you look at the pound, it's also pretty strong against the yen, but the prevailing trend is bearish. So knowing that we are not expecting any form of tariffs on Japan, then we should be expecting that their monetary policy, which is basically based on hiking rates over the course of the year, then the yen is expected to be strong. So if you've been looking to short this particular market, this was not the particular time as per the market open. But as for now, it seems more likely that we will have an opportunity to go short again. So the idea here is to be looking for short selling positions. So already we're into the bullish territory. So anytime you see the sellers coming into the markets, then in that case, there will be a very strong likelihood of going for short selling positions. So we'll be only observing these markets, trying to identify whether the sellers are coming back. But as per now, it's a wait and see kind of situation. And it's the same thing for the USD JPY currency pair. Of course, we are currently retesting the highest price that we saw on Friday, and there's a good chance that this will be an area where sellers eventually come back and we start looking for short selling positions. So we can't go against the BOJ policy or even the Fed policy. And as long as both agree, then this bullish momentum doesn't make sense. It only creates opportunities for us. So AUDUSD clearly closed the gap. We know that there was a weekend gaps happening this morning. So immediately closed the gap. So we expect the market to continue moving in the same direction. So sorry for that. For the Australian dollar, we expect it to be giving back some of its gains to the dollar, especially considering the new tariffs on Australia. That is on steel industry, steel and aluminium. So after the market closed the gap, we expect the market to move in the same direction of the gap. And that's the same case for the pound. So clearly we closed the gap here. We expect the market to keep going down. In this case, the dollar strengthening against the pound. And of course, also for the euro, after the market closed the gap here, we expect to see some further downside momentum with bets that the market might even trade lower and head straight for the 1.02 price level. So outside of that, I'm looking at the dollar against the Swiss franc. Here we're looking at the small gap that was created here. The dollar gained higher, pulled back, but at some point, the idea is that as the dollar pulls back, eventually the dollar will bounce back. Those Trump policies have been quite a pump on the dollar, so we expect the dollar to continue moving higher. So the pullback is much welcome as an opportunity to be looking for buys. So outside of that, we have New Zealand USD. The gap was already closed this morning. So notice the weekend gap here. And now we expect the price to move much lower. So at this point, I would expect that price would move to retest the day's low. That's around 0.56 to 81 price level. So outside of that, there's a good question here from Emma. I don't know. Apologies for the pronunciation. Should be AMMA. Good morning. 25% tariffs on aluminum and steel imports. What's your take? Of course, I expect these to drive the dollar higher. Australia could be taking a big hit, so we expect a much weaker Australian dollar. So, of course, our USD should be bearish out of this morning's news. So there's a question on USD JPY. So of course, we have already analyzed the USD JPY issue. We expect the yen to continue with this strength. So given that this morning we have had a different reaction than we expected, the idea is to follow the fundamentals, and the fundamentals are indicating that we are going short. This might as well be the trade of the day. Like, we haven't seen the dollar being this strong against the yen in a morning session. So in this case, going for a short time position will provide an opportunity where you could trade it all the way down to the previous low, which was last week's low, as per last week on Friday, around 150.955. So there's a question on Ethereum. Somehow I think Ethereum is dying naturally. Just checking. So all along, while other cryptocurrencies have had their opportunities, Ethereum hasn't been doing well. So literally, if you're looking for opportunities to trade in the markets, then looking for opportunities to short Ethereum would be a really good idea. So this is the performance of Ethereum on the monthly chart. This was last month on January. This is the current month. So let's look at the performance since the year started. So I would say that we opened the market at this point. The highest Ethereum went was 11% higher, and currently it's down 21% since the year started. So you can see the big drop at some point since the year started. Ethereum was already down by what, 35%. So it's not something you should be very hopeful about. So in this case, if you look at the current price action, of course, it's a range. This basically shows you the price performance. And based on technical analysis, this is also the support area. Of course, we should be expecting to see some good ideas if the market breaks, but also it could also rip to the upside. But this hasn't happened yet. So it's more of a wait and see kind of scenario. So that's from a trader's perspective. Which trades are you currently in? I'm not in any trade. Of course, I'm in a trade on Bitcoin, a big one. But then there's other trades available in the market. More likely, I'll be looking for shorts on the oil prices. But at the same time, also I'm looking at longs on the JPY pairs. So GU, we have already discussed. We went through the GU pair. So currently pound is a pretty weak currency compared to other currencies. From the 4-week chart or even from the daily chart, you can see that the long-term trend is the pound losing against the US dollar. So despite the late comeback that we saw late in last month, the market has now begun to slump. So if you go to the 4-hour chart, you zoom it out, then we can all see that there is some form of a trend here. So you're tempted to break towards the higher side, but then if you look at last week's high versus the previous week's high, it's more of a rejection of higher prices and the market moving further downwards. So now looking at the performance today, yes, there was an attempt to close the gap immediately, but after that has happened, there's more likelihood that we should be seeing some further downside momentum. So we'll be observing that to see whether there's evidence of sellers coming back. Better late than never. What's up, team? Hi, this should be totally dark. Thank you for joining, and I appreciate you. So as we approach the end of the presentation, then we should always be checking on the newest developments in terms of content and what we are sharing. So as always, we continue bringing you good content on both the Financially Incorrect podcast as well as the Bearish Banter podcast. And our latest podcast features one of our top leaders in the industry, Monica. So just look at the money mistakes and big losses episode on the Financially Incorrect podcast. Go through it. Let me know what you think about it. And of course, you should expect to see some really good insights from the podcast. On top of that, we have the newest episode of the Bearish Banter podcast. Myself and Jesse Ogola are talking about the markets. In this case, we talk about the triple threat. Stargate is a big AI infrastructure project that the US is going into. We're also looking at Trump tokens and tariffs. So clearly, we have seen the way the tokens and tariffs have been impacting the markets. We already talked about this. The episode is out now. So kindly check it out on the Bearish Banter podcast. So as always, if you're a beginner trader and if you're looking to start your trading journey today, make sure to check out the links in the description below. Register for a trading account. It's free of charge and it will get verified within a few minutes. And of course, after you register for an account, you need to learn the basics. And we have a very nice course for you. It's called the Novice to Pro series. So just go to FX Pesa YouTube, just check Novice to Pro. And if you do that, you'll have a pretty good course to get you started into trading. And that's also available free of charge. So the Novice to Pro series by FX Pesa will be available on your YouTube. Go through it, practice trading for a while. And once you're confident, then you can get into live trading. So thank you, everyone. Enjoy a happy trading week. And of course, this session happens every day between Monday and Friday. And this happens at 11 a.m. So thank you, everyone. Enjoy the rest of your day.